Hello, ladies and gentlemen. This is Ashraf Lighty. Welcome to this new edition of the video market analysis. It seems that we're finally going to have some risk off and some prolonged some selling. And I've held up and saying no, but there's many indices and many indications. Now we haven't issued a trade in a while because the market has just not been directional. And the thing that I want to talk about is basically again for the WhatsApp group members. Well, listen, here's the thing. I'll just be very straight and honest with you. The reason I don't give any trades in indices because I'm not comfortable to give the premium anything that is less than 200 or 300 points in the Dow, for instance, because if I do, I'll have to give a sufficiently large stop, and the stop and reward to risk ratio will be 1 to 1. It's not enough for a lot of you, but for the WhatsApp groups, I can go in for 100 pips. So right now the Dow is around 26 790 or 26 800, and I said to go for a quick short targeting 26 660. And I said this yesterday, and then with the Nasdaq targeting around 11,700, 11,120 that we said we're going to go, we didn't go. So now I think we're going to have some sort of 10,700 as a preliminary target. Now I'll tell you what I'm looking at. Just one of the few things. So everybody knows about the VIX, and Wael in particular just asked me. He's one of those people who likes to know in the WhatsApp group what is the thing you're looking at? What is the thing you're looking at? Wael is the person who said, why are you now looking for euro sterling, for euro dollar to finally break around 110? Why are you looking for sterling dollar to break around 126? Is that going to be a well-defined range? And I said, no, it's not going to be a well-defined range. This time is different. We're going to break out. And we did break out. And right now the euro dollar is around 200 pips, and cable is around 170 pips in the money. All these are in the money, and you look at them all here. Basically, you know where we are. And EuroCAD, we are right now at we're right now at 55.70, and our trade was 54.50. So we're making around 120 pips. And when EuroCAD is pushing higher, and when Euro Sterling is pushing higher, you know that stocks are risk off and they're coming down. And this is just a great trade here to have running 91.70. People said, oh my God, are we going to break below 80, below 90? And I said, yeah, we could go towards as low as 89.60 or 89.30. And we went as low as actually as 90. But look at this. And this is the trade euro sterling. We bought euro sterling and sterling, and they're both making money. It's just a matter of time for them to make money. People said, well, you're buying one, you're selling one, it's a hedge. But 89.90, this is where we entered. The trade is still going. 89.90, now we're making around 91.15. So that's really easily like 100 pips. Cable, that's what we said. Again, just to give you an idea, cable right now, we bought at 25.20, and we did say we're going to go 26.60 and then come back down. We're going to go to 27.80. That's exactly what happened yesterday. So why am I talking about indices the way I'm talking about? Because look, so you know about the VIX. What I'm looking at is I'm looking at this thing called basically the VVIX. And basically when you have this ratio, which is basically VVIX divided by the VIX, and the VVIX is just basically sort of a derivative of the VIX. And basically what you see, ladies and gentlemen, is that when you see this starting to come down or respecting a trend line resistance. Usually when this comes down, when the VVIX divided by the VIX is coming down, meaning the VIX is pushing higher more than its derivative, the VVIX. So when the VIX is pushing high relative to something else, the VIX is strong enough. You don't look at it by yourself. It's strong enough. It's pushing higher. It's stabilizing. And if this comes down further, this is going to bring down stocks. So this is basically the volatility related argument. All right. If you look at the Dow yesterday, this is not the cash. This is the cash. This is not the CFD or the spread. But you look at this chart, does not look appetizing when you look at this chart yesterday, the closing of yesterday. This is one of the things. And I'm not talking about a big decline. I'm talking probably around 26,580 or 26,600. I still believe that 26.3 is a big support. All right. And when you look at the Nasdaq, for instance, this is basically the Nasdaq. And this is what we did yesterday. So yesterday, this could be looking towards a double top. We have Microsoft and Tesla today and coming in. But this looks like it's going to have to come down a little bit, but not below 10,500. And that's why probably we're going to go towards 10,700, 10,650. I'm going to take profit. So that's basically one of the things. And the other thing, ladies and gentlemen, is the following. So the gold to oil ratio, something that I talked about in my book, guys, here, you look at it. This is really, if you speak English, and you do speak English because you're listening to this. If you look at my book written 2007, there's a big chapter about the gold to oil ratio. I was the first one in the world to write about this stuff. Not yesterday, not the day before. I wrote about this 2007, 2008. You go here to the gold oil ratio, and why is that inversely related in generally to indices? All of this stuff is here basically. Where's the chapter? And please don't go for the PDF, the free, and buy the book, show some contribution, and get it. So this is not the latest cover. The latest cover changed, but this is basically, we talk about all of this stuff. Where's the gold to equity ratio? But then there's the gold to oil ratio. Okay, gold to oil. And then we talk about all of these things, with the yield curve. But never mind all of this stuff. This is not publicity. This is not ad. This is telling you that this stuff works. So here is the thing, is that you're looking at this, and you're looking at the gold to oil ratio. So this is gold divided by Brent, not US crude, but it doesn't matter. And you're looking at gold as it goes down, gold as it stabilizes relative to oil and Brent. This is usually, as this pushes higher, stocks usually come down. And as this drops or stays what it is, stocks usually push up. Okay. So we're trying to push up here. So I think that there is a small signal of, again, shorting indices, but not a big drop. Okay. That's basically that. And then I talked about oil, which was just very, very controversial, very tough things to read. And I did say that, look, you're looking at this gap left by that famous weekend. And oh, by the way, and I talk about all of this for free. You really need to go to the newsletter to get it, because we talk about all of this stuff for free, me and Adam. If you go to your account, and basically, if I sign out here, and if you go into your account information, and you go in, and you have to, when you don't have to join, because if you're joined already, you go in and you click to subscribe for the intraday market thoughts, which is basically, it is these things that you get for free. And I do a lot of writes, a lot of stuff about the market, about market levels. You need to get this. You need to subscribe to this. It's for free. And there's a lot of stuff here about levels and so on and so forth. Okay, yeah, there is some stuff about the premium, but all of these are key levels. Okay, US crude, I mentioned this. Well, Ashraf, but I'm paying, I'm a member, I don't need to look at this. No, you need to look at this, because some of the stuff we give that is good enough for free, and the stuff enough that we give that is not as frequent as possible, that is not as frequent for the paid. But if you're a WhatsApp group member, if you pay 12 months and 6 months, then you'll be able to get that. Sorry for this admin and marketing stuff, but it just needs to, because I always get the same questions. So let's just go back here. So this, if you look at this, how do you fill this gap? Well, if you look at this, the difference between 41, 40, 42 and 36, the market has been in this level during all this time. Now there is an ascending triangle, and it's going to break. And if it breaks higher, that will be negative for the dollar, and it will be negative for the dollar. It will be good for stocks. But look, we had a false break, and now we're coming back down. And now we're coming back down, and and we're going towards 40.80. And if we do come back down, then that will help the narrative that stocks are going to go down. I'm really kicking myself that I didn't issue a long in gold. I told people, look, in the current level, we're going to go towards 1840, 1840, 1840. And I'm kicking myself, even though I have these great signals. I told you that, gold to silver broke below key level. That's going to accelerate silver. We'll talk about that in a bit. But basically, this is why. And so if you look at the Dow, or if you look at the VIX, for instance, so the VIX, so what would you go? It touched this low. It's coming back. It's going to try, if it breaks above the 200, I don't think it's going to go above the 55, or probably it's going to test this level, just around this level, around 28. Okay, so that's what I think is going to go 28, or at least at 29, enough for us to see some sort of decline in the VIX, in the Dow, here. And if you do, and if by the time you listen to this and the Dow is at the 26,660, I don't think it's a good thing to sell. But if we are around 2660, let's say 26,600, you really have to be careful, okay? But the market is not wasting its time. It's still, speaking of gaps, the Dow is still playing around here. And for those who trade the S&P, then yes, maybe we could see some decline here, but I don't think we're ready to drop just below this level, which is 32.20 and then 30.32. Okay. And yeah, there's China, there's all of these things, but I don't have time to speak about the fundamentals here. We speak about that in the in the IMT. But here's what we said. So, and what about gold? Where is well, and what about gold is I want you to get value out of this. I did notice that I did say a while ago that according to Triangle 1830, 37 was the next target. We went to 1850. The market is probably now getting ready to come back down. It'll have to come down, and it could go down by 70. Why? If you look at this, each big rise is followed when there is a pullback. You see 1750 here. We come down towards 1660. So basically, the market comes down by 80 or 90 points. Here, more or less the same. So you have to be ready. We're going to see some sort of decline by 60 or 70 points. We could go all the way towards 1820 or 1813. I think we could go. Okay, 1830 minus 1850 is really 18 is around 30. We could drop back. So be careful. It doesn't mean that you sell everything and then you have to go back down. You can leave a 20% of the usual size. You make it long. 30% of the usual size. You make it long, and then you do sort of 40% of the usual size. You're going short, but you have to know where to get out. And if you want to get out, you want to put a take profit just above 18 to 20. That's one of the things you could do. Uh, you know, Gold to silver ratio. I talked about that in the IMT. Just again in the free stuff that we send to people. Uh, Yesterday I said that the last 4 months, these 4 months are the best 4 months for gold and silver in 10 years. But here, uh, if you look at this, I said when gold breaks below silver ratio, it breaks this way, and that's a big deal, and that's gonna really break out the silver. And here's where we are. We are around 83. And as this breaks, basically the gold to silver ratio, the silver just gives it a lot of confidence to both gold and silver. I talked about this many times in all the videos. So basically, here's what we talked about. We were in 91. Now we are you know, at, uh, at, uh, at 80, at 80. And probably you guys don't care about all this. You care about silver chart. And silver chart right now is just be careful because I was looking around 2130 to be big resistance. And as this is 85 RSI, but if you look at the weekly, we are looking at just a big level. So I wouldn't really buy it here. I would not chase it, but I would try to play it intelligently, and I would put probably some longs just around 2130, 2150. Okay. But again, sterling, this was just a great trade that we had. Very proud of it. It did exactly what we said it did. If you buy sterling dollar and you buy euro sterling, you're hedging one, but they're both going up, and their technicals are very, very solid. So look at this. Not only we broke about the trend line resistance, well, this is for you. He was very, very reticent, very reluctant that sterling was going to break. This was 2 days ago. I have a WhatsApp conversation with him. He said he's going to do this, do this, do this, and said no way, it's going to break, just like euro dollar broke. Okay, and it broke above the 200. It broke above the trend line. This is going to be the next support. 2640. This is where you're going to buy. Because why? Because all of this is detail. Because if you're a responsible man or woman with future, you're going to look at the weekly chart. Weekly chart says basically that I'm going to try to retest at 127.30. All right, guys. So all of this stuff, if you have any questions, just let me know. Uh, we've had a lot of great input of people, for the WhatsApp group for the 12 months who purchased the 12 months and this or the 6 months subscription. They're very happy with it. They give me some great reviews. All of them said it pays easily the subscription. And where do I go? I mean, if you look at this here, if you look at all of this stuff, I can show you the Arabic, the testimonials. I can show you the testimonials. This is what they say. Joe, real-time incisive analysis. All of them said the profits from the extra trades, Christine, have more than covered the cost of my membership. I took out the 6-month subscription a week ago. Phil, I want to say this WhatsApp is brilliant. This is the real deal. This is the real deal. I talk about the Fed. I talk about Trump. I talk about COVID. I talk about gold to oil ratio. But I also tell you when is it time to go in and when it's time to get out. When is it time to hedge? When is not? This is just part of them. We had like 20 or 30. Very happy for you guys, the members of the group, or you're listening. Very, very thankful. All of those speak Arabic and speak English. Here's his testimonial part 2. All of these. Joseph is his He's from Barcelona, I think he is. Margaret from Hong Kong, Rami, he is from Canada. Andy from England, Sanjay from England, Gary. All of these guys, look what they say. Take a look. Thank you very much, and keep it up. And what we have to be careful with this market, let's not get um, too complacent. But this is how you make money. You got to be careful. You got to go in and out, and you know where to stay when you know when to overstay. Thank you very much, and all the best.